Hi, Carlos. How are you?
I'm doing well, Julia. Hello.
Yeah. Great to see you again. Today we will talk with you about second day of Permissionless, and excited to hear what was new, what you can share. And I know it was more extensive regarding previous topics you have shared. So I know this was also related to economics. So can you please describe the second day?
Absolutely. So, as I stated in the previous conversation with you, I mean, the permissionless conference was divided in general sessions and then individual sessions tackling institutions, the future of finance, cultural, and also technical, right? So in this particular second day, I attended, of course, the general session and most of the institutional sessions, just because my background is coming from corporations and banking. So I wanted to know what is happening right now there, right? So basically, the general session, just to summarize, I mean, they touch base again on how the ecosystem needs better regulatory clarity, how they can build a better ecosystem with better user experience, with more security, how, for example, Solana is expanding, so Visa and Solana is expanding in CDBCs and cross-border transactions. Some people were questioning if the institutions were here or not. I mean, some people say, no, they never came. And then some people say, no, they are here. The thing is that they are here not to trade NFTs. They are here to tokenize their existing real world assets, right? And in that sense, I mean, they have always been here, right?
Mm-hmm.
So
So what
the bottom,
institutions
what?
what institutions were presented there?
Oh, there were many. Like there were like asset managers. It was Citibank. I think it was JP Morgan as well. So very important
Hmm.
representation from institutions, right, and banking corporation, right? So, okay, so again, coming back, I mean, they need to improve on the user experience, increase the usability, how to make the ecosystem more inclusive, right? What else? Yeah, and then this was basically the general session, right? They touch, they expanded and repeat what they talked in the first day, and then
Mm.
in the institutional sessions, in particular, the future of finance and an institution. I mean, I went to see my favorite economist, Jim Bianco, and he was in the middle of a panel of also
Mhm.
other important economists, and they were saying like crypto and crypto valuations are going to be driven by interest rates, and I couldn't agree more with them, right? Because when
Mhm.
I did my paper in Bitcoin, I mean, Bitcoin was born in a time in which we had zero interest rate, right? Because, and it was basically was competing as a form of money versus money in deposit in banks that were paying zero, right? They're still paying zero, but now we have rates going up, and that is kind of constraining a little bit the price of Bitcoin, right? Other things that they were talking about, this is more in the microeconomic field, right? Like what is going to be driving inflation, right? Inflation is going to be
Mhm.
driven by oil. There are several drivers, macro drivers here. I mean, we have in USA, we know that Biden stopped the licenses at the beginning of his government, but now the production of oil, USA oil, is ramping up again. However, the strategic petroleum reserve has been drained now almost to zero. And
Yeah.
on the other hand, you have the Arabs, right? The Arabs are basically, they have a strategic plan to get out from oil from up by 2030, right? So that right now they are selling shares of Saudi Aramco to and ramping up the price on oil
Mhm.
in conjunction with the Russians, so they can invest that money today in something else in the future of whatever they want to become the Middle Eastern economy or hub, whatever they are planning for the next 20 to 30 years, right?
Mm.
So for Jim Bianco in particular, I mean the economy he basically postulates that we already passed through recession last year, right? And then we are not yet out of the woods economically. Uh, and what is causing inflation is basically driven by higher oil prices, right? And also he postulates that even if the Federal Reserve wants to bring down the rates to 2%, that's not feasible because we enter to a new normal, right? A new reality in which, yes, they will, the Federal Reserve is going to say, yes, we are battling and we are trying to bring down, this is higher rates for longer, but at the end, this is not going to be achievable. And then we are going to probably settle at 3 or 4%, right?
Was there any forecasts?
There are forecasts that you can see in Bloomberg, but I mean, the thing is like and this is what also an argument from Jim Bianco, right? Like these forecasts that happen in Bloomberg, is basically consensus alignment, right? So people still think there that we can get to 2%. Only the smartest economists start thinking out of the box, such as Jim Bianco, right? And they say, no, this is not going to happen because now we have a multipolarism, we have wars, we have realignment of supply chain, we have reshoring of strategic means of production and assets, right? So then this 2% belongs to history, right? Belongs to the time in which, I mean, we have cheap credit and so on, right? But this was pre-COVID, right? And after COVID now, everything changed, right? So this is basically the summary of this macroeconomic viewpoint, right? Then we enter to the real world asset tokenization, right? So basically it's an opportunity of $4 trillion. A big chunk of it is real estate. However, what the participants are interested are in more short-term maturity, easy to convert, right? Like if you think about real estate, those deals are for many years, right? You had to lock in your money for 3, 5, 10 years, right? But when you are talking about receivables, trade finance, payables, letter of credit that you could, you can pool and collateralize and issue, then those are easier to offer in this platform, right? So this is the interest, right? There are some issues related to this on how to land this model. It has to do with the asymmetry of information between sellers and buyers across many classes. How do we need to standardize the information that comes from oracles, right? Oracles basically are these platforms that connect, that are being connected to the chain when you want to know about pricing, let's say you want to know about credit scoring, things like that, right? There's no agreement yet in pricing. There are several providers, they are fragmented, right? And as I explained you before, when there is fragmentation in industry, there is an opportunity to standardize, opportunity to bring a new platform to orchestrate everything, right? So of course, the topic of regulatory clarity came again into the conversation. I mean, they complained that there is no clarity from the SEC in terms of how to form funds and how to do the tokenization, right? So, and this is hampering business there. They are not bearish, but they think that short term, they will look for opportunities outside USA, right? So, and this comes again in line with the risk that USA is facing of losing edge in this industry just because of no regulatory clarity, right? So they are focusing in assets that reduce volatility, right? That is why they love a lot stable coins, and that is why I mentioned the stable coin is a super app, because basically this tokenization, this real world asset digitalization is gonna be based on stable coins, right? And yeah, they also mentioned that Africa has a lot of potential. How they see themselves growing to 2025, some people were telling about 100 to 50 to 300 billion dollars. For the next 2 years, slow growth. Yeah, so basically they are half and a half, right? Like they are not so excited, but at the same time, I mean, they hope that the USA get the regulatory clarity for the industry, but at the same time, they are looking for opportunities outside, right?
Okay, so what about stable coins? You mentioned it's like a focus on it, but I'm curious, what about trading then? What is the business?
Well, okay. So basically, when you do these pools of assets that you collateralize and then you issue NFTs, right, or tokens on it, you want to do this based on stable currencies that represent a dollar or
Yeah,
represent
yeah.
a USD, because they are not volatile as compared to Bitcoin or Ethereum. In Bitcoins or Ethereum, those are going to be volatile, right? And this is what institutions don't like, because, and this was very put very well by Citibank, by the representative of Citi. He said like, okay, the more volatility, the less clients that you will have. Yeah, very simple, right? You want these kind of clients are not traders. These kind of clients are people that just want to earn a nice 10 to 12% return. They don't go crazy for 100, 200%, 2-3 times multiple that you would get in crypto trading, right? Or trading shit coins, right? No, these people are serious people. They want to keep and preserve their capital. So they will settle for 10 to 12%, right? Like a bond, right? And then these pools also need the USDC, the stable coin, because they don't want to add to the issuance volatility, right? This kind of investor rejects volatility, right? So they want something nice and easy, right? So
Just
that is
interesting,
why.
were there any comments in this event from where coming such predictions, such focus? Is this market observation, some researchers, or just some institution represented and just share their interest?
Oh yeah, no, they were coming from institutions, especially from the platform, right? For example, the CEO of Centrifuge was present. There were also asset managers from Black Tower Capital. Also, Ripple X was there. So yeah, so basically this came from platform, from players in the ecosystem, right? Now, there was a totally different segment coming from the real institutions working on their own means, and they were very optimistic about Latin America. They are doing a lot of things with Peru, Colombia. I mean, they mentioned that there is a lot of regulatory openness, right? However, there is a lack of infrastructure connecting data and the way they need to securitize and originate this kind of assets, right? Also, another constraint in Latin America is the access to more stable coin, right? Like, because at the end, stable coins represent dollars. It's basically the same problem that the banking system has in Latin America, right? Access to capital in dollars. You can get a loan, easy loan in Colombia for Colombian pesos, Peruvian soles, but getting a loan in dollars, it depends on the availability of the international reserve currency in that particular geography, right? So same thing is being reflected in stable coins, because the stable coins, specifically USDC, represent $1, right? So probably one potential solution is get a conglomerate of, I don't know, of investors or liquidity providers that pull out for specifically for this country, for Latin America, dollars, and then you issue USDCs specifically for the purpose of supporting the origination of this kind of assets in Latin America. That can be one potential solution, right? So, so yeah, they salute basically that stable coins are efficient. They are very necessary for securitizations, and also it support the FX trading, right? You may understand that in the realm of assets like FX, foreign trading currency, is also a huge market, right? That is mounted on top of existing currencies, in this case, USDC, right? So that is why it's very important. What other things they are looking in Latin America is low defaults, scalability, better governance, better pricing, formation. So then,
Yeah,
I mean,
it's very interesting. As I remember, we have discussed with you in our previous interview, And before this event, you mentioned this, like the business can prosper there. It's really, you know, interesting to hear that conference brings the same things. So time.
Correct.
Yeah.
Correct. And there was one concern only about Latin America, that right now most of it is lefty, but they hope that Latin America is gonna evolve again and get away from that particular way of governance and thinking, right? So there are hopes still that USA, I mean, get better clarity, but right now these institutions are looking for opportunities in Latin America, right? But it's badly needed more stablecoin adoption and even more clear regulatory frameworks in Latin America, even if they are more open to regulate crypto more clearly than USA. And they are hoping that it will take some time, but they are very optimistic. In terms of traditional finance, I mean, we have people from Franklin Templeton, we have people from Apollo. They were talking about interoperability, how to reduce operational risk, how to provide better risk management, reduce fraud. They were the one who coined that the volatility means lower clients, right? And yeah, I mean, they need also regulatory clarity, but they are thinking, they are hoping for the better, but they are thinking that it's gonna take also some time to clear the land, right? The regulatory landscape, basically. And that was basically all about this second day, right? It was more, for me, it was more institutional, more macro-driven, and it was the general sessions were more like a repeat and an even deeper dive the previous day, right?
So you told that there was raised topics about economy. So what they shared and what is revolutionary changed or their predictions? Just excited to know in the current circumstances, yeah, because when we observe that even comparison with what before and now, what is going on, it's now different circumstances.
Well, I mean, other than rates driven the crypto market, meaning like if the rates go up, the crypto is gonna stay flat or tank, go down, right? When the rates start going down, then this is gonna be good for crypto. That's basically what's the Colorado, right? And you can see it right now, like if you see the price action of Bitcoin, you can see that the price is struggling to get above the 200 moving average, right? Once they achieve that, once Bitcoin goes above the 200 moving average and stay there, then you can say, yes, the next rally is coming. But right now, it's having some issues. And the price is oscillating basically between 30,000 at best and 26,000, right? So anytime that goes below 27, I would say it's a good time to accumulate. Even below 26 or close to 25, even better time to buy more. But I mean, I think that this is the struggle, right? As long as the yields, especially in the long-term bonds, are high, then all the asset classes suffer, right? I mean, we have seen this week, right? Like the stock markets are down, gold is down, oil is coming down. So, yeah.
Clear. And it was talk only about Bitcoin or any other cryptocurrencies, which sounds promising.
The conversation. I mean, they need to talk about Bitcoin because Bitcoin drives most of the other ecosystems in terms of correlation and price, right? So if something hits Bitcoin, it's gonna hit altcoins and it's gonna hit Ethereum, right? Ethereum, the focus was on scalability of the ecosystem and interoperability more than pricing. And of course, they spoke about stable coins in the way that they back up the real world asset tokenization and the tokenization initiatives, right? Yeah, that was basically, they didn't talk about any, or the conversation didn't focus on a specific token, right? Although they were honorable mentions, right? Like they talk about Avi, Solana, right? Well, and the last section that I attended is basically the state of the NFT related to art. So one of the most important participants was a representative from Decentraland, but that is basically a social engagement platform that makes a great effort to share up to 50% of the art revenues to their creators, right? So they were talking about how they can get more they can come back to the good times of the NFT, right? So how they can create more farming models to make money. They were talking, oh yeah, it was like easy to make money during the last DeFi summer, but now creating art basically involves KYC also. So they were thinking about how we can be more supportive of our artists, that especially the ones that are using NFTs. And Decentraland happened to be very artist-centric, as I explained. So they were talking about how art is they were talking about art and identity, right? And wearables as an art as well. They were talking about that art represents or states a personal status as a part of their identity, and how they can create more wearables, right? Also, how Decentraland goal is also to amplify the creativity of the artists, right? And basically, they take care of the storytelling because they realize that some artists are good at creating collections and art, but they are not good at market themselves, right? So that way they support them into that pitch and this history, storytelling behind the collection or whatever, and then they make the artists to focus on what they do best, right? It's creating art, right? Yeah, so basically they focus on how to coordinate better, build better. Again, the topic of improvement of the user experience was present there. And also in the future, they want to do this more seamless experience and focus more on galleries, right? Yeah, and this was basically that. One interesting concept that I hear also was like how was in so much use in the previous DeFi summer, the 100 fans of the artists, right? And they would create the NFT of your 100 top followers and distributors of your art, right? So, and at the end they were saying, okay, that model is good at the beginning, but the artist should not focus too much on that because they should be focusing on creating art, right? Rather than having followers, so that was it. And this was the whole conference. Yeah, I don't know if you have more questions, but this is basically the end of it.
Great, thank you very much, Carlos. It was really interesting to hear, and I see a lot of still to be discovered and done. And actually, this topic about digital identity sounds really about creator economy. That would capture my attention. And if you can share your vision, how it will develop, and what are opportunities for entrepreneurs, for example, in this area, because I think it can open more opportunities, but probably in some other markets. So what do you think?
Well, I mean, I would say that, I mean, I see here in this conference two great opportunities, right? One is the tokenization of real world assets from the institutional side into the digital world, right? But for their assets, right? These guys are not coming to trade NFTs or whatever, right? So these institutions basically having the regulatory clarity and then launching bonds, launching stocks, launching receivables, supply chain finance, trade finance, all that stuff. We are talking about trillions of addressable market, right?
No.
And this morning I was hearing a conference. It was a speech about one participant saying like at least 1 trillion they will have to do in the next days, in the next years, right? The next 2 to 3 years. So I think there is a lot of opportunity there for institutions, right? Now for the guy, right? For the content creators, for the artists, for the gamers, right? There is still a lot of opportunity as long as the seamless experience is being created, right? I think that right now the ecosystems have matured enough, and that is why I can see that there is a lot of orchestration. There is a lot of efforts to work on interoperability, right, among platforms, right? So I think this is horizontal. Sorry for the call. I should have suspended this, but yeah, but basically this is what I see. So they are clearly two different worlds, right?
Clear.
There's opportunity for both, you know.
Thank you.
And right now, the regulatory framework as it is in USA is making the startup efforts to look outside USA, right? Until there is some clarity, right? And still the institutional side is still, and I'm talking about banks, I'm not talking about asset managers, right? I'm talking about banks, they still need the regulatory clarity, right? In the meantime, what we have on the real world assets is only centrifuge trying to work with asset managers, right? But still there are regulatory hurdles, right? They are trying to capture the liquidity of different chains, right? So, for example, rather than they launching a protocol or an application in each of the chains, let's say Solana, let's say Aave, let's say blockchain, let's say Lightning Network, they prefer to bridge each of them with the existing product, right? So here you see again the interoperability part, the bridging part of how the ecosystem is coming together along, right? That's what I'm seeing from here.
Yeah, very interesting. Okay, thank you, Carlos. Hope we talk next time about our new topics.
Absolutely, anytime. Thank you for giving me the chance and for having me.